Welcome to today's webinar, The Digital Divide Part 2 with Bernhard Koepp, CEO and Portfolio Manager at CJ Lawrence. Today's date is March 12th and all attendees are in listen-only mode. Participants can use their telephone or computer to hear the audio of today's broadcast. We also want to remind our audience that today's webinar is educational in nature. Please, if you have any specific questions about today's broadcast, email Bernhard B. Koepp at cjlawrence.com or call him at 212-888-6342. Now, a little word about Bernhard. Bernhard has been advising private and institutional clients for more than 25 years through a variety of investment cycles. Bernhard applies his extensive knowledge of global markets and bottom-up security selection to construct tailor-made portfolios for the discerning investor. Prior to spearheading the relaunch of CJ Lawrence, Bernhard joined the ISI team in 1999, led by Jim Maltz, now chairman at CJ Lawrence. Bernhard began his career in 1989 at Deutsche Bank in London, its structured corporate finance division. And in conjunction with Jim Maltz, he launched and managed Deutsche Bank's top 50 U.S. fund and Deutsche Bank's Bulldog portfolios. In addition to managing individual accounts for high net worth individuals, Bernhard directs CJ Lawrence thematic investment offerings, including the American Renaissance, European Select, and Bulldog portfolios. Bernhard received his master's in international relations and economics from Johns Hopkins University and his bachelor's in international studies from George Mason University. Bernhard is also president and trustee of the Opera Foundation, a New York-based nonprofit involved in the arts. With that, welcome, Bernhard.
Thank you, Tina. Thank you for joining this webinar. We believe this is a perfect opportunity and good timing to give you part two of our digital divide story, which we started earlier in the year. So it was very interesting yesterday. Markets were basically rewarding a lot of the former tech companies that performed very well in the previous cycle. I mean, a lot of these were the big tech companies, and there was a lot of head scratching going on. Why all of a sudden is money flowing back into these large tech companies that were sort of yesterday's story or last year's story? So we think this is part of a long wave growth story that we've been on for the last 6 months, which is really the digital divide story. So to set the stage for that, when we started the year, we thought markets are setting up very well to perform well, given the upheaval and all the negativity that we saw in the markets in the fourth quarter. And a lot of the sell-off that we saw in the fourth quarter was really due to policy uncertainty. I mean, if you remember, there was a lot of optimism around end of November, early December, when we had the G20 meeting in Buenos Aires. Basically, we thought that China and the U.S. would have a very nice handshake on trade negotiations, and basically we would have that issue off the table. Well, that was a bit optimistic, and after that didn't occur, we saw more economic data, basically out of Europe mostly, and also out of China, which pointed to a really quite a severe global slowdown. So our view going into 2019 was fade the macro trade. I mean, this is not the consensus view. I mean, the consensus view going into this year was you need to be in late cyclical type exposure. We don't agree with that. We think global growth is going to be under pressure, and there are many things we worry about. We worry about a recession in Europe. We worry about China's slowdown, and we also worry about an earnings recession in the United States. So if you go back to the things that are working, and it's interesting, the market action yesterday really shows that the market is going back to rewarding companies that have long-term secular growth. So our whole digital divide story is basically focused on finding new opportunities in the emerging digital, what we call digital transformation. So if you listen to the webinar in February, I'm going to go into a little bit more depth on a lot of the individual names and the concepts that we discussed in that earlier webinar. So if you look at the various growth drivers of the digital divide that we talked about, the first thing is artificial intelligence. I mean, we now hear almost every day something on media or social media or on the news on how artificial intelligence is going to be changing our lives. Blockchain is the other part. I mean, there's a lot of people who use the word blockchain but don't really know what it means. Blockchain really came about more through the Bitcoin discussion and Bitcoin mining and how that all is driven by blockchain technology. But I think people don't understand how blockchain is actually being used in very normal things that we do every day in our lives. The next part of this is mobile payments. I mean, there's been this public debate on the 5G rollout. 5G is going to change the way we do things. And if you just think about it in terms of what we do now, when we have our smartphones, we're always trying to find a good Wi-Fi connection or a good network we can log into. In a 5G world, you don't have to worry about that anymore. It's basically 10 times faster in terms of speeds and connectivity than what we had previously. So if you think about that, the next step for that is really everything is connected. If you don't have to worry about the speed and connectivity issue. On the mobility and autonomous vehicle side, that's the fourth part of this. There are many things going on here on the chip side and sensor side. I'm not going to go into more detail in this call because, as we said at the outset, we want to fade the cyclical parts of the economy. So even though there are incredible technological things going on in the automobile sector surrounding mobility and so forth, we want to be very careful not to be investing in the auto sector or semiconductor sector because these two industry groups are going to be very much affected by cyclical factors. So the last thing, which we think is really the holy grail here, is genomic sequencing. That's the most exciting part of this, and I'll get into that in more detail. So if we look at the digital transformation story that we outlined earlier this year, and dig into more detail here on this slide, page 3, I've basically shown you a lot of the companies that we think are investable. I mean, in this webinar, I'm not trying to be exclusive here. I mean, there are many more companies that are involved in the digital divide than I'm outlining here, but I think what I'm trying to do here in this webinar is show you which companies are investable today. And that's very important because we do care about valuation and risk because that's very, very important to our private clients. So if we dig into more detail here on page 4, I just want to give you a few headlines of things that have come out on our company. So Amazon Web Services, for example, we're now at a 30 billion run rate when it comes to the cloud business of Amazon. This came out at the end of February during their last quarter. I mean, this is a phenomenal large business now. I mean, we always talk about Amazon more on the retail side, but their web services is becoming very, very large and continues to grow at an astonishing clip. The same goes if you look on the left there, Microsoft cloud business. I mean, we got to know Microsoft as a computer software business, which basically sells Windows software. As you know, they bought LinkedIn recently, so they're really taking this whole digital divide thing to the next level. So the interesting thing now is their cloud business is now going to be bigger than their Windows business. I mean, that's an incredible watershed moment for Microsoft, which used to be a very sleepy tech company. So what's, again, very exciting for us as large cap growth managers is that a lot of this innovation that we used to see in small companies is actually happening in large companies. So if we continue on this theme of digital transformation, look at Corning. So on the left side there, Corning is the supplier of all the next generation screens and interfaces that we see in our iPhones or really anything that has to do with touchpads. So the next form factor, which is starting to We're seeing that in among Samsung, and I wouldn't be surprised if we see that in iPhone very soon, is this bendable glass. So if you think about where 5G is going to take us in terms of connectivity, Corning glass is the sort of thing that drives new form factors. And think about Corning glass being in furniture or anything that can be connected with the new 5G standard. So if you continue on governments, I mean, lower left, Department of Transport begins Google Cloud migration. This is in the United Kingdom. So Google Cloud, which, we tend to only refer to Google in the search business. Google is working with the United Kingdom government to transfer all of their data and in-house applications to the cloud. I mean, this is a massive transformation that's happening in governments all around the world. And there are very few companies like Google that are in the forefront of making that happen. So if we continue on Adobe, artificial intelligence and the data gathering that we are so used to these days, and there's a massive debate about that, obviously, from an ethical point of view, but without Adobe software, none of that is possible. So if you look at the front end systems of websites these days, they're all created by Adobe. And there's another company called Autodesk on the far right on page 4, which is also involved with this more on the commercial side. So without Adobe software, I mean, Adobe is growing like crazy. And we're, again, just at the beginning of this. I mean, there's this notion out there that cloud computing, cloud migration is yesterday's story. We would totally disagree with that and saying there's a lot of runway left here in going to the cloud. Palo Alto Networks is a company that we own that has an AI-based, artificial intelligence-based platform. It's all about network security. That's a company we love to invest in more recently. Obviously, with all the things going on in the cloud, network security is very important. So if we go to the next level in terms of bricks and mortar retail, just two examples of where digital transformation is taking place. One is Ulta Beauty. We've talked about Ulta Beauty many times. They're an innovator. I mean, they just bought, or in the last year, they bought 2 companies that are early stage companies in augmented reality and AI, and they're basically taking their approach to beauty and making an experience, but not just in their stores, but also online and in the cloud. So if you are a young woman these days and you're trying to try out different lipsticks, you're going to do that on your iPhone. And you have an augmented reality platform that Ulta has invested in that allows you to try different colors and lipsticks and so forth. So we would always say this is not your mother's beauty shop. I mean, this is next generation. It's very interesting. The same-store sales growth that Ulta Beauty has versus a lot of its other competitors, whether it's Sephora or MAC or others, is a lot higher because of this, because they're creating a beauty experience that is second to none. Home Depot is doing similar things. I mean, I love Home Depot. I spend almost every weekend there because I like to do things in my house. So Home Depot is doing the same sort of thing. They're taking the experience online with visual and AI related things. You can plan out any type of a project you have visually online. And they have partnerships now with Pinterest and other web stores. So even Home Depot, which is your classic bricks and mortars, is getting into digital transformation. Alibaba on the top there. Look at the investments. I mean, they're aiming to teach 1 million women to code by 2030. So they're taking this to heart. They want coders out there. If you have young kids, make sure they take coding classes. This is the future. So let's move on to the blockchain. And we've talked about this a lot, and you'll be very surprised what's going on there. So in the financial services industry, this is where this is really playing out. Forget about Bitcoins. It's really in the financial services industry. And there are 4 companies that we've outlined here, or 5 companies actually, that we find very interesting in this field. It's Broadridge, Bank of America, JP Morgan, S&P Global, and SS&C. So if we dig a little bit deeper here, It's very interesting to me on the top left there. So Jamie Dimon has always sort of belittled the Bitcoin guys and the technologies that are behind Bitcoin. But, lo and behold here, a couple of weeks ago, he announced, hey, guess what? We have our own cryptocurrency, and it's going to be a JP Morgan-based crypto currency that's called JP Coin. And it's not because they want to actually have you transact in it, but they're using this as a test case to see how they can transform their financial services inside their very, very large banks. So if you think about what blockchain really is, and there's this very big word there on the bottom left there, it's called Ethereum-based technology. Ethereum is another way to say distributed ledger. So basically, blockchain allows you to, in a much cheaper way, handle large quantities of data. And if you think about it, data is about people, it's about privacy, it's about transactions. And if you're not on top of this as a very large bank, whether you're JP Morgan or Bank of America, you're going to be left out. Or even 10 or 20 years from now, you may not be in business anymore if you're not investing in these technologies. So the lesson here again is the big guys are investing in this blockchain technology. It's not the small banks. They don't have the money to do this. So if you look at Bank of America, they just revealed that they got a new blockchain patent targeting cash handling. So you can see again, Bank of America obviously is one of the biggest retail banks or the biggest retail bank in the U.S. They're in the forefront of this, and if you look at the coin-based kind of periodicals out there, that's where you read about this sort of development. Broadridge is proxy voting. Anybody in the financial services industry knows proxy voting is a real headache. So they're using blockchain technology to make that a lot easier. So we love this business. It's a recurring revenue. It's a fintech type company that is really at the forefront of using blockchain. The same goes with S&P Global, which is using blockchain to track everything from, as you can see here, oil inventories or commodity trading. That's a very globalized, complex business. There are lots of players. There's lots of data, lots of activity. Again, blockchain is the thing that makes that much more efficient. And then on the right, you see SS&C. This is also an extraordinary fintech company, had fantastic earnings if you look at the last quarter. They're basically, again, using AI-enhanced technology to do, or machine learning, to help streamline accounting and reconciliation. All the things that used to be very annoying in the financial services industries is aided by AI. So let's move on to the next category, which is the 5G rollout, which I mentioned, which is very, very exciting. There are a few players in this, obviously, that you've heard of. You'll be surprised, even somebody like Facebook is in the middle of this. There is this debate, obviously, or this question surrounding Facebook at the moment when it comes to privacy and what to do with that data, or what to do about that, and whether their business model, which is based on advertising, is the right one. So they're looking actually at Bitcoin or technology and mobile payments to use that as a reward system to perhaps move away a little bit from the advertising model, but to have users be rewarded with mobile coins, and then to use that in the mobile payment world to actually have activity on their platform. Alipay is a huge, huge platform in Asia and the rest of the world. Obviously, that's out there. American Tower is going to be a huge beneficiary in the U.S. with the 5G rollout. The Visas, the MasterCards are all, and of course, Apple Pay also involved in that. And I also give some credit to Starbucks here because they were one of the early investors in payment systems and Square, for instance. So let's dig a little bit more deeper into this on page 8. So the real winners, in our opinion, for the 5G rollout are tower companies. So we love American Tower. And on the bottom left there, we give a little bit credit to Barron's. They actually got this right. So they wrote this article back in June. American Tower isn't quite up 43%, it's up 30%, but we have a lot more to go with the 5G rollout. So we love the towers in this digital transformation story. If you look at Alipay, I mean, Alipay is now, this is Alibaba, the big Chinese internet company. They are now actually even rolling out in North America. So if you look in Walgreens, for instance, is now accepting Alipay as a payment method. You see even Alipay getting involved on the bottom there on the sheet on page 8 is getting involved with financing phones. So the online payment guys are not just helping you pay things, but they will act more and more like a bank as well. WhatsApp, which is owned, that was what I mentioned before with Facebook. So Facebook owns WhatsApp. That they're also making inroads into mobile payments. So in testing that in places like India, which do not have a very extensive banking system. So you'll see some emerging market economies just leapfrogging straight into this kind of mobile payment. It's interesting, Alipay on the right, top right there, 43% of iPhone users now use Alipay, and then that's up from 36% just 5 months ago. So you see a trend here that people are using this more and more. Alipay just announced they're in Target now, they're in Taco Bell and other types of retailers. Then lastly, which I think is the most, again, exciting investment theme for us is this intersection of what we call biotech and data science. You know, this is not only very exciting from an investment point of view, but of course this is very exciting for humanity, because I think we're going to within our lifetimes going to cure some of the big diseases out there. The main one is oncology, so cancer-related applications and are really in the forefront of this. So the companies that we think are investable currently are on this page. Regeneron, we think, has an extraordinary pipeline. Illumina does the machines, so the sequencing machines for DNA. Of course, the big cloud guys like Google, Alphabet are involved with this. Without these large companies, these biotech and devices companies cannot operate. Boston Scientific is in there, and I'll explain why. Becton Dickinson, Abbott Labs, Thermo Fisher, which is also leading in life sciences. So let's dig a little deeper into that on page 10. So, Illumina in the middle there, Illumina has been telling us for a couple of years now that the $100 sequencing or cost to actually analyze a single human genome is within reach. So if you look at the history in the bottom and the middle there, it cost, back in 2006, it cost $20 million to analyze a single human genome. I mean, that's just amazing. So here we are, 12 or 13 years later, and we are at $100. So Illumina is asking, I mean, the real question here, is the world ready for this? And this is incredibly exciting, not just for investors, but obviously for patients as well. So if you think about what this is going to do, I mean, if you remember, your DNA is the thing that runs your metabolism. So if you think about drugs these days, I mean, if you react badly or to certain drugs, your genomics sequencing data will tell you how much of a certain drug or of a certain pill you should take, and will help you in that process. So the big pharma is very interested in this, and you saw a couple of big acquisitions recently. Roche bought Sparks. So there's a lot of things going on here on big pharma that's interested. So Regeneron is our main horse here that we're riding on the oncology side, which is immunotherapy. They have an amazing pipeline here that we think is going to be very interesting for investors. If you look at companies like Thermo Fisher, they're at the forefront of genomics editing. So they're getting involved with companies that are in the so-called CRISPR technology. If you think about the DNA, that these are proteins, and if you can edit the proteins on the DNA, you can now actually cure certain diseases. So this is very, very important technology that is being used by some of these large companies. Abbott Labs is very interesting because if you think about Abbott Labs, it's really it's blood testing. So if you take the genomics sequencing side and the or single cell analysis that's going on, Abbott is basically all the things that you find in the lab. And it's also Becton Dickinson. These two companies, the things that you find in your typical lab these days are all the things and devices and diagnostic equipment is basically produced by Abbott Labs, Becton Dickinson, and also Boston Scientific. Boston Scientific is more known for its stents and devices, but think about the future of this when all these things converge, the digital part, the connectivity of 5G and all this, the connected world, which is going to help us in healthcare. A lot of that, it will play out in the device companies as well, and Boston Scientific is very much in the middle of that. So page 11, I've given you a lot here. Page 11 is our so-called circle of trust here of all the investable ideas that we think that are very important in this digital transformation story. We think there are many years ahead of us, and we're early in this, and we think the market environment is perfect for this. If you think about the environment we're in, which is low growth but steady, and we have low interest rates. I mean, we had Powell give this amazing interview on the weekend, which is somewhat unprecedented, and where he basically said they're on hold. So low interest rates, low growth around the world, and this is where these secular growth companies really shine. And so if you look at the whole circle here, I've kind of matched the companies with the different themes. These are the kind of companies that we're investing in these days. So to wrap it up on page 12, we are a boutique firm here in New York City, based in New York City. We cater to high net worth individuals. We do customized portfolios. Do check us out on our website at cjlawrence.com. We have a long history at CJ Lawrence giving advice to institutions and individual investors, which this dates back to the 1800s. You can subscribe to our publications. One of our partners, Terry Gardner, puts out an amazing weekly, which gives you insights into our thinking on the markets on a weekly basis. And then we put out special reports like the one in the middle that you see there, which is on our very specific portfolio strategy, which we call Bulldog Investing, which basically invests in companies with a dominant position in growing industries. So with that, I will turn it back over to Tina, and I thank you for listening.
So thank you very much, Bernhard. That was a great presentation, very informative and very interesting. I want to thank all of our listening audience, and I'm glad that we have the website up there as well, and that I want to let you all know too that you can find us on LinkedIn, Facebook, and also to YouTube. So don't hesitate to get in touch with us if there's anything that you want to ask Bernhard. And we hope that you have a great day. Thank you again so much for the courtesy of your time and attention. We'll talk to you soon. Take care. Bye.